Rachelle, what are you seeing? What are you hearing? It is echoey out there.
That's right. It's a busy day on Capitol Hill. Of course, we had that CPI print come out. A lot of people wondering, is this going to be enough for the Fed to change its trajectory? We'll have to wait and see. Obviously, you have a very data-dependent Fed. I'm going to have a guest coming up on that shortly. And also what could be a landmark regulatory framework when it comes to cryptocurrencies. I'll be talking to Senators Gillibrand and Lummis, who co-authored this legislation. In a rare bipartisanship push here, we'll see how many senators we can get on board with this. And of course, to see what happens with crypto, as they're really waiting to see what happens as you get more institutional investors trying to get in, and everyone really looking for answers as to how crypto is defined as an asset or a security. So we'll have those answers coming up. But first, of course, we're going to start on that CPI print. Joining me now, we have our guest, Joseph Zeballos-Roig. He's Semafor's domestic policy and politics reporter. Thank you for joining me this morning. So how surprised were you by this latest print?
I wouldn't say that I was terribly surprised. I think a lot of analysts were expecting just like a very, very good print. And there is a lot of good news in this report. I mean, it shows that inflation has cooled to its lowest level since March 2021. The headline reading was 3%. That's the lowest level since the pandemic started receding 2 years ago. And there's a lot of other good news to take away here for consumers and the Fed as well. Food prices are continuing to fall. The rent prices is also starting to kind of come down, and it's starting to kind of demonstrate that the Fed's early campaign to rein in inflation is actually showing some signs of success without causing a recession.
And what about some of the stickier parts? Obviously, we're also looking at core CPI as well, which the Fed does focus on. But what about some of the stickiest parts? Are we seeing those starting to cool down at a more meaningful rate?
Yeah, I think that housing, rent and shelter is like among the stickiest levels, and the fear is that rents will continue increasing and just eat up more of people's budgets. But they're actually, for future prints, analysts have been saying that there's actually causes for optimism, just as rent increases are just not increasing as much as they used to. It's just starting to cool. So I think that bodes well for future prints when it comes to just reading the tea leaves for inflation.
And it's an interesting situation that we're in, especially when you look at the still very tight labor markets, but barely seeing some softness there. What sort of position does this put the Fed in there, where they are seeing this still historically low unemployment and inflation still starting to come down? How much justification do they have for either pausing or even taking maybe one rate off the table at this point?
I think you could start making the case that this print was pretty good, and that you can even make the case for another pause at the next meeting later this month. But when you read the minutes of the last monetary policy meeting, there were members that still wanted to keep raising rates and not go ahead with the pause that they did last month. So I think that more likely than not, we are still going to see the Fed just increase rates. But given that they have been raising rates and the labor market hasn't been really damaged by it, I just think that the Fed is just going to continue raising rates. But you're starting to see officials say that the campaign to raise rates, the most aggressive campaign they waged in 20 years, it's starting to reach its end.
Now, we know that when we get these sorts of prints and the better news, everyone wants to take their victory lap here. How much credit should go to the Fed versus, say, President Biden and his Bidenomics, or just some of the stresses from, say, the banking fallout also playing into this?
Yeah, so that is an interesting question that I think that so many people on Capitol Hill are going to wrestle with. President Biden has recently tried to tout his economic agenda as, Bidenomics, which basically consists of targeted investments in manufacturing, clean energy, and infrastructure. And these are all investments that are designed to help grow the middle class. But, historically, it's the Fed that has a principal role in combating inflation. But, I think you're going to see Biden administration officials and the president himself fanning out across the country this summer to make the case that, cooling prices and then wage gains that we've actually started to see at the bottom end of the income spectrum are the result of Democratic policies, particularly the stimulus, which, you could start making the case that pretty much put the economy in a pretty solid position that it is now, along with some of the Fed's concerted efforts to raise rates.
And you do have to wonder about this recession. Apparently at this point, one of the most well-telegraphed recessions that still hasn't really happened yet. But as we talk about wage growth increasing, you also have employers trying to then have to pay more to hold on to some of these employees. How does that factor into perhaps how long of a recession we might have or where we might be headed at this point?
So that's another interesting part of this debate is that you're starting to see like major banks on Wall Street start to kind of temper their expectations for a recession, given that the economy is in such a really good place right now. But that recession that many Republicans in particular have been warning about has not shown up, and from this print there really is no sign of a recession in the distance. I think, Fed officials are still kind of expecting something to happen maybe the tail end of this year or even early next year as Biden's re-election campaign really gets underway. But when it comes to, the recession that everyone's been expecting, it's really just not on the data right now.
And even though things are improving with the economy and also with inflation, it doesn't seem to be moving the needle much in terms of approval ratings for President Biden. What do you think is the disconnect between perhaps how people are feeling, the vibe they're getting about perhaps not feeling like they're doing as well economically, and that message just not translating when it comes to President Biden's popularity?
Yeah, that's another interesting point. That's another thing that I think that we're all going to be paying attention to. Another really good thing that people notice in this report is that wage growth actually outpaced inflation significantly for the first time since early 2021. So, if that kind of reading keeps hold and Americans start noticing a bump in their paychecks, which allows them to spend more, then you might start seeing them feel better about, the state of the economy. But right now, people are still struggling with rising prices like basically everywhere they turn. But I think that's going to be another interesting element to keep an eye on is, wage growth for American workers.
We'll certainly be keeping track of that. I do appreciate you joining me with your insights there. Joseph Zeballos-Roig, thank you so much. Semafor Domestic Policy and Politics Reporter. Thank you so much.
Thanks for having me on, Rachelle.
All right, stay with us here on Yahoo Finance. Much more just ahead.